Okay, so if you're looking into managed investment accounts, maybe as a way to, make things a bit simpler, it does bring up a pretty big question, like, how do you really know if the manager's goals are aligned with your financial goals?
Mm,
Well, one tool, one mechanism that's really designed for that kind of fairness, that transparency, is something called the high-watermark metric.
right.
So today, we're doing a deep dive. We're using a really helpful explanation we found from Faida Ventures Ltd. To really unpack what this high-watermark thing is and honestly, why you should probably know about it.
Yeah, definitely.
By the end of this, you should have a much, much clearer idea about this, well, pretty crucial part of managed accounts.
Absolutely. And, high water mark, it might sound a bit technical, maybe a little abstract,
A little bit, yeah.
but the idea itself is actually quite simple. Essentially, it's just the highest value that your investment account has hit, ever.
The peak performance.
The absolute peak. Yeah, think of it like the highest point on a chart showing your account's value over time. Now, where it gets really interesting and relevant is how it connects to performance-based fees in these managed accounts.
Okay.
Because these fees, they're different from just like a flat annual management fee. They're only charged if the account actually hits certain performance targets.
Right, okay. So the high watermark, that's the target. That's the benchmark that needs to be beaten to trigger those performance fees.
Precisely. That's the benchmark. And the discussion from Faida Ventures Ltd., it gave a pretty clear example of how this works.
Yeah, I remember that.
So the high watermark, it sets the bar. Let's say your account hits a new all-time high value. Fantastic.
Good start.
Right. Now, according to their example, if the account then grows by, let's say, another 30% above that new high point,
Above the peak.
yes, above that specific peak, that's when a performance fee might kick in, but only on that extra 30% gain. And the really key thing here is that the high watermark, it's dynamic, but it only ever moves up. It only resets when the account hits a new record high.
Got it. So it's not just about any increase in value then. The managers, they only really get that performance bonus when they push the account past its previous best into genuinely new profit territory.
Exactly.
That feels like it could really shift the whole dynamic between the investor and the manager, couldn't it? How does that structure actually align their interests?
Well, this is where I guess, the elegance of the high watermark system really comes through.
Okay.
By tying a part of the manager's pay directly to achieving new financial growth for you, the investor,
Yeah.
it creates this really strong alignment of interests. Like Faida Ventures Ltd. put it, their success becomes directly linked to your financial success.
Makes
You only pay those extra performance fees when you've actually seen your portfolio grow beyond where it's ever been before. That 30% increase we talked about, that's real tangible profit in your account.
right. So they're not incentivized to just claw back losses or sort of tread water around old performance levels.
There's it all.
They only really get the bonus when you, the investor, are actually seeing significant upside. It really pushes them to aim higher, doesn't it?
Precisely, yeah. Their whole compensation structure, it motivates them to actively look for strategies that won't just, make back any losses, but more importantly, to actually drive that portfolio value to new peaks, new records, and this constant striving, it directly benefits you.
Okay, that covers the upside.
Yep.
But what about the inevitable rough patches? Markets go down sometimes. What happens then? How does the high watermark protect investors during those downturns?
Ah, yes. This is a really, really crucial protective feature. So if the market takes a hit and your account value drops,
Which happens?
which absolutely happens, the established high watermark, the peak it previously reached, it stays put. It doesn't automatically reset lower just because the market dipped temporarily.
Okay, wait. So even if my portfolio value goes down, let's say 10%, the point at which performance fees might kick in again, it doesn't start until I've not only recovered that 10% loss, but actually gone above the previous highest point.
That's exactly right. You won't be charged performance fees just for getting back to where you were. It's only on the gains above that existing high watermark.
Wow.
Yeah, so it provides this really significant layer of, downside protection. It offers a degree of, peace of mind during volatile periods because you won't be paying performance fees just for recovering lost ground, only for actual new profits.
That clarity, that specific rule, it seems like that would build a lot of trust. Just knowing exactly when those fees apply must make the whole thing feel much more transparent.
It really does. Yeah, the high watermark metric, it just inherently promotes transparency. Both you and the manager, you have this clear, objective benchmark. Everyone knows the target.
No fuzzy math.
Exactly. There's no ambiguity about when those performance fees are going to be triggered. And that clarity, it really cuts down on potential confusion or misunderstandings. It fosters a much stronger sense of accountability, really, for both parties. You can clearly see the progress or, lack of progress towards hitting new highs.
And Faida Ventures Ltd. also mentioned how this encourages the providers themselves to keep improving. How does this model push them to continuously refine their strategies?
Well, think about it. There's this constant pressure, this need to beat the existing high watermark to earn those performance fees.
Right. The bar keeps getting higher if they succeed.
Precisely. So that creates a really powerful incentive for them to constantly be evaluating, tweaking, and improving their investment approach. They have to keep innovating. They need to refine their algorithms, adapt to shifting market trends, do whatever it takes to push beyond that benchmark.
Makes sense. They can't just rest on their laurels.
No, exactly. Faida Ventures Ltd. mentioned, for instance, their own ongoing updates to their automated trading systems.
Right.
Using, sophisticated algorithms, even trading robots. All of that effort is ultimately geared towards achieving those new high water marks and therefore delivering better results for their clients.
Okay, this has been really clear. Let's maybe just quickly summarize the main advantages of this high watermark idea for someone thinking about a managed account.
Yeah.
What are the absolute key takeaways?
Sure. I think the main benefits are pretty straightforward now. First, you get a clear performance-driven fee structure. Simple as that. You pay for new profits.
Okay.
Second, it directly aligns the manager's financial incentives with your own financial success. Their win is tied to your win.
2.
Alignment. Third, it provides really important protection during market downturns. You're not paying fees just to recover losses.
Protection. Got it.
And finally, number 4, it just fosters a much more transparent and accountable relationship between you and the provider. Everyone knows where they stand.
Transparency and trust.
Yeah.
Those are the big ones.
So, bottom line, really understanding what a high watermark metric is and asking if your potential provider uses one, it empowers you, doesn't it? It makes you a more informed investor.
Absolutely.
It helps you judge if the fee structure is genuinely fair, if it's aligned with your growth, and if those crucial safeguards are actually in place.
Exactly right. I'd say it's a fundamental piece to look at to make sure your investments are really set up for genuine, secure growth and that you understand exactly how performance is being measured and well rewarded.
So as you explore your options for managed investments, really keep this concept, the high watermark, front of mind. It's such a key part of understanding the fees and how your risk is being handled. And, it makes you wonder, could applying similar performance-based benchmarks more broadly actually help increase trust and transparency across other types of financial services too? That's a really interesting thought. Yeah. It definitely encourages us to think about how aligning incentives based on clear, measurable performance could potentially benefit investors in, well, all sorts of different financial areas.
Definitely something to think about. Now, if you are interested in seeing how one specific provider, Faida Ventures Ltd., talks about using this metric, you can find more information strictly for educational purposes, of course, and for your own independent research on their YouTube channel. That's at Faida Ventures.
Right.
And also their Facebook page, facebook.com/Faida Ventures. But please remember, this discussion today is purely educational. It's not financial advice in any way.
Absolutely. Always do your own thorough research.
And always, always consult with a qualified financial advisor before making any investment decisions.